But the one that we are watching out for today is Titan, because the margins were a bit of a miss. But the big question is what happens from here on. That question will be now answered by Mr. Ashok Sonthalia. He's the CFO at Titan, joining us on the show. Hi, thank you so much for making time and speaking with us. Just wanted to begin by discussing, Ashok, your jewellery margins, because they are at the lowest levels that we have seen in the last 9 quarters. Do you still maintain your guidance for the jewellery EBIT to be around 12 to 13%?
So, we have been quite satisfied with the Q1 performance, and it was as per our plan. Q1 generally is slightly weaker from the margin profile because Akshaya Tritiya, which is more gold-led quarter, studded activation actually happens in Q2. So Q2 margin profile and Q3 festive and Q4 again diamond activation. So overall, we are still very, very hopeful that we will maintain our guidance and continue to deliver between 12 to 13% EBIT for the full year.
The demand in May and June was subdued, let me rephrase it. The demand in May was subdued, June saw a recovery. What is the demand outlook currently, given that there are some festivities which are going to be pushed back this year? And do you see 20% plus growth sustaining for rest of the year?
So, for last 10, 12 months, I would say we have been seeing the volatility in prices and oscillation in consumer sentiments. Sometimes they are there and sometimes there are dull moments, fortnights when nothing is happening. Which was the characteristic of Q1 as well, which we just concluded, and we delivered about 19-20% growth there. We talked about that July has been also pretty much okay and as per Q1 trend for us. The Adhik Mas has not seemed to be impacting at least July month for us, and we are doing pretty well. Studded activations have started towards end of July, and we are seeing very, very good response from the customers. It's very difficult to predict everything, but we believe August, again, the whole diamond activation will be liked by the consumers and they will kind of purchase. Festive season, already on a very strong base last year. So as long as we get 19-20% number, we will be more than happy to deliver. So for the full year, still we are targeting close to high teen growth numbers. And there is nothing contrary at this point of time to suggest us that it cannot be achieved.
So just want to understand more on the studded portion that has remained flat at 26%. Is there a trend there, and is there lower demand for studded jewelry? Any concerns on that front?
So diamond ratio in our thing is pride in portfolio mix is pretty much stable. It was slightly lower than pre-pandemic and now has kind of recovered to that level. And in this quarter will be critical for us to see how does the whole ratio works. But as we have been talking about earlier also, that we don't have a target that we want this much diamond, this much gold, this much coin. Every category, every catchment is important, and there are teams who kind of take actions to push. These ratios are generally outcome, and we are more interested in more and more customers coming to Tanishq, and market share gain is happening rather than specifically thinking about that how the studded margin, studded ratio will go up in our portfolio. But there are several initiatives, several new campaigns which have happened in the month of June around diamond jewelry, and now the activation has started. So we are pretty positive about Q2. On Q2 completion, studded ratio should be much better than what we have seen in the past.
Sure. Ashok, I also wanted to talk about the comment that you made on the con call that the earnings growth will lag the revenue growth. So in terms of profitability, how should one view FY24?
No, so we maintained, there are, this business is a bit seasonal business. So quarterly profitability profile is always different from Q1 to Q2 to Q3 and Q4. Kind of weddings which happen, say in Q1, and the catchments and the region of the country which participate in that. So everything put together, there is a generally profile where Q2, 3, and 4 are expected to be higher profitability quarter compared to Q1. And that is what we have been talking about, that while we do understand that market was expecting better profitability margin in Q1 than what we have delivered, but we are kind of okay, and we are as per plan for 12 to 13% delivery. Also, one thing I must remind you that last financial year, we have been talking about that we had some one-off gains in the jewelry business, and that accounted for more than a percentage point throughout the year. So to that extent, some calibration for FY24 should be kept in mind by the people who look at our stock.
Okay. The company plans to achieve 10% market share in the jewelry over the next 3 to 4 years. What is the strategy in place for that? What are the near-term store expansion plans? Where would you be focusing on specifically in terms of regions?
So multiple levers, so there is no one particular solution or strategy. Multiple levers on our gold harvest scheme, our gold exchange programs, our regionalization strategy, the whole merchandising strategy, and focusing on even high value studded. So the whole regionalization strategies, again, like say Tamil Nadu, we have been working for last 3-4 years. AP Telangana, we have been working. West Bengal, we have worked. Mid Bharat, we have worked. So so those strategies, those teams continue to work, and we are seeing good result. Idea is to keep penetrating deeper into the market. We are opening. Retail expansion is another big part of our strategy, and we have kind of started not only opening more new stores and even expanding the existing stores, so which doesn't reflect in the count of stores, but if you look at our retail square feet area, so the existing stores are expanding themselves, new stores are getting added, and between Tanishq, Mia, Zoya, and Carrot Lane, I think everyone has a very, very detailed retail expansion plan, the whole digital omni plan. So several things. And of course, on top of that, Jewellery International plan is adding further to the growth of the jewelry division.
Okay, Ashok, that point is taken, but talk to us about the demand trend in the international market and any new markets that you're looking at tapping into, because international, could it be a real growth driver for you? Because you've been very, very domestic phased otherwise.
So FY24 major focus would be to expand further in GCC and US market. Of course, we are evaluating some of the newer markets also, but I don't see much happening during FY24. In GCC, of course, we are opening new country. We had, looking at 1 or 2 more countries out. Right now, we were mostly in UAE, but now we are kind of getting in other countries as well. North America, US, first store had come, and I expect another 3-4 stores can come in this financial year. The response is extremely good, I think, and our strategy to start with mostly the Indian diaspora, the global Indians, so those clusters where they are in large number, but gradually we are finding traction with the other communities, other nationalities, and idea would be to kind of keep expanding that circle for us, which goes much beyond Indian diaspora, but to start with, it is with them, and we are getting very, very warm response.
The wearable growth has seen strong growth during the quarter. Talk to us about the demand scenario there.
So wearable is going to be an important part of watch division growth plan. We have said that in last 12 months, a lot of work has gone into creating dedicated organizations, getting the right talent around this. And now we have in last 12 months, and this category requires very, very fast merchandising, introduction, new models, new features, etc. and which I think we have a great pipeline, which we delivered in last 12 months, and next 12 months are also going to be very exciting. Other than that, of course, marketing communication, it is more digital platform product where 70% of sales happen through online, 30% on ground. So already they have a benefit of a very, very vast distribution network, which we enjoy with analog watches. Then we are getting into some of the new channels also where smart watches and smart wearables they can be distributed. The other one, of course, is the price points, the segment which we are targeting. There are very expensive watches, Apple, Samsung, and then there is many players kind of competing against each other. We are trying to find some white spaces somewhere where we can offer a value proposition which is exciting for the customers, and I think we are seeing some success in that.
Sure, and Ashok, lastly, teal and carrot lane businesses, because both of them are breaking even or slight into the profitability. What's the outlook for these two small businesses for you?
First, to talk about teal has now, they were impacted during COVID time when the aerospace business was slightly down, and because of the chip shortage, supply chain issues, even automation solution was slightly struggling during those 1 or 2 years, but they have come up very well. The travel demand and the aerospace industry is really booming at this point of time. So they have very, very strong order book. I think FY24, and they also entered into the semiconductor equipment component manufacturing. So that is another kind of sub-vertical getting created in teal, and very exciting prospects. They have been investing into capacity, but all this money required for capacity expansion and putting newer equipment, etc., can be managed through the borrowings, which is of course being part of Titan Group. They have advantage, and which is how it will be managed. So no fresh equity infusion is contemplated in teal. Neither in teal nor in carrot lane. Carrot lane also continues to have aggressive growth plan, aggressive expansion plan of retail network. They have been a very, very good digital omni player already, and their requirement of growth can also be managed through working capital finances. So no further equity infusion is contemplated.
Okay, Ashok, thank you. On that note, we'll let you go.